Think about it too, to your point, how short-sighted this is. Who's the traditionally biggest buyers of our debt? U.S. debt is China and Japan. China is no longer going to be buying U.S. treasuries. They'll be selling.
No, yeah,
And who will be buying U.S. treasuries? It's going to be bazooka money from the Fed, inflationary. We may see
inflationary,
disinflation.
exactly.
Absolutely. The inflation is the end game here, no doubt. We
Yeah,
may see
yeah,
disinflationary forces, but the
yeah,
only way to solve this lack of love and trust for a weaponized, over-indebted U.S. IOU is for the Fed to print money to buy it. That's inflationary currency debasing. Couldn't be a more perfect scenario for gold, which is why
no,
treasuries aren't the tier one asset anymore. It's not the safe haven. Even in this recent carnage, treasuries haven't been ripping, they've been falling. That's an interesting sign. And what? Gold is holding its own much better than US treasuries. And relative to the stock market volatility, it's doing its job. But I mean, that's my question to you, Egon, as well. In the midst of all this craziness, many people are still waiting for gold to fall off 30-40% like in 2008 in a market crisis. Is this a crisis like 2008? To be determined. But gold is in a very different macro setting now. It is a tier one reserve asset. It is a safe haven. US IOUs are not. And yet people are still waiting for a dramatic pullback in gold to understand it. How can you help people understand that this is a different world now and that gold is a far better savings asset and tier one asset and reserve asset than an IOU from a broke Uncle Sam?
yeah. Now, that's obviously something that we both have and have been thinking about for a long time. And I've been very clear what was going to happen this time. Everybody has feared a 2008 uh, fall in gold, which was quite major. Of course, it had been going up from 2000, around 2000 to 2008. So, but when we saw the 2008 fall off in this, global markets, stock markets in particular, the gold to some extent followed for I think about 6 months or whatever it was.
Mm-hmm.
Um, uh, this time it's very different, as you said, and I've made that clear for the last at least last 6, 12 months that gold is not going to fall with the market. Gold is in a totally different situation now because the world is in a different situation. But just take 2008. I think uh, U.S. debt was probably around, I think it was around 9 trillion US debt, federal debt. 9 trillion. What is it today? Over 36, going for 37 trillion. And as I see it in the next few years, this deficit is not going to be just 1 trillion, it's going to be 2 trillion, 3 trillion, 4 trillion. And the debt is going to grow exponentially because of all the problems we have in the world. There'll be obviously the economy will be poor or bad. There will be tax revenues will be very low, and there'll be one rescue after the other of the financial system, or banks going under, etc. So there'll be more money printed than ever, which means high interest rates, higher debt, higher deficits. In that scenario, gold is not going to go down. Gold is going to go up because, and now, as you pointed out, people have been speculating in stocks, in private equity, in credit, in property, in bonds now for well, the whole of this century at least.
Mm-hmm.
And it's been absolutely, trees growing to heaven. Nothing can go wrong. This
Right.
is like at the end of every speculative era. 29 was the same. The day before the crash, you read how this is permanent now. This is now the golden era. But
Mm-hmm.
it isn't, and it stopped. But this time around, I thought that when stock markets were going to crash, which I expected for a long time, that possibly for a short while there'll be a rush into bonds. But the market is more intelligent this time. They see
Mm-hmm.
that bonds have zero value. Government bonds have zero value for investors. It's only the Fed who sees value in it
Yeah.
because they have to, because they're the only buyer. But for the rest of the world, they see now that A, the US is never going to repay the debt, and they might turn it into a 100-year debt instead of 10-year debt. It might be even interest free. They postpone interest payments. Um,
Mm-hmm.
so the value of those bonds are virtually zero from the point of view of the debtor. The US is not going to be repaid that with normal money, with only funny money. And number two, because of that, because of the growing debt and the inflation and the deficits, the dollar will collapse. And so will other currencies, of course, not just the dollar. All currencies will collapse. But some people believe that the dollar was going to go on forever, but it isn't. And therefore, so if you buy an instrument which in a currency which is going to collapse, and a debtor which is going to collapse, which is the US in this case, you shouldn't touch them. So therefore, people are not going to buy bonds, maybe temporarily, but it doesn't. It looks like not even that. So you can't hold stocks now because stocks are now entering in. As I see it, this is not just a pullback, a correction that people will be talking about for the next few months or 6 months or whatever. Everybody believes the correction, tries to jump on it, and then it goes down again and down again and down again, as happens when a secular bear market starts. And that's what we're seeing now. This could be a 10 or 20 or 30-year bear market in stock. Never goes straight down. It has its sideways moves. It has its corrections. But the long term could be at least as long as 29 to 54, 25 years when the Dow, which it took the Dow to recover after the 29, 32 crash. So this could be a long bear market in stocks, in credit, private equity, for example, which has been where everybody has believed that you could get 20, 30, 40% returns forever. Now, all of a sudden, they realize that all they have is illiquid investments. Not even a lot of them are not even quoted anywhere. So therefore, and there's no liquidity. So that will be a massive problem area, as will the credit markets, as will property markets. Now, even people have been, when the wealthy gets too much money, they go into fringe asset classes like art, cars, wine, etc. But that's not going to hold those markets either. They're also going to crash. So sadly, the choice is now very, very narrow for investors. We have been looking at preserving wealth, and therefore for our investors and ourselves had a major percentage in gold and a little bit in silver for 25 years. The markets are waking up to gold now and believe that maybe we should have some gold. They're not going to, still is only 0.5% of world financial assets, and there's not enough gold for people to go 100% into gold globally, and that's not going to happen. And of course, even people who want to invest through us, and other people who are not thinking of gold yet, they say, well, it's gone too fast. I'm going to wait for a pullback. And we've been telling them, and I have been telling them, gold is not going to correct in any major way this time. So if you wait, at some point it will, but from what level? I have no idea. 5,000, 10,000, whatever it is. So therefore, you are not waiting for gold to correct will probably mean that you miss the market. And gold is not an investment. Gold is wealth preservation. And that's the only way to look at it. So therefore, this is going to be very interesting because you're looking at now global markets coming down, bond markets, property markets, and stock markets. And where can investors go? And that is going to be a major dilemma because they can't all get into gold. You can't produce more gold than 3,000 tons a year that we're doing now, that mines are doing now, plus a bit of scrap gold. And therefore, the only way to buy gold and get gold in quantities to pay up for it, as the gold prices are going to be a lot higher. There will be a revaluation of gold by multiples. And a lot of people still believe in this reset. And nobody knows what they're talking about when they say reset. I say, when I ask them, what do you mean reset? What kind of reset are you talking about? That people believe that first, before it was the World Economic Forum, they were going to do the reset. Their power is now just plunging, which I always said it would do, because such an artificial, horrible conglomeration of people who are just opportunists. That was all it was, nothing else.
Horrifying.
And people are now slowly or too slowly going away from that. So the World Economic Forum was never going to reset the world because they had no power whatsoever, although they believe they did, led by Schwab, of course. Now, the other reset. Was course America resetting the world. But what's America? What kind of reset could America do? Reset to gold, gold that they probably don't even have 8,100 tons. That every new government in the U.S., every new president sends one of his top guys and look at the gold in Fort Knox and say, yes, the gold was there. I saw it.
Yeah. Trust me.
He saw one gold bar or a couple, and whether it was genuine or not, he has no idea. And with the 8,100 tons are there, they're obviously in three different vaults at least. They probably are not there, or if they are there, they've been leased anyway to the market. So they can't. If whenever America tries to revalue the gold, which they're not that stupid, they know that they haven't got it, because every time they've sent someone to check the gold, they've always come back and said, yes, it's there. They never, because before Trump was elected, yes, we're going to audit the gold, all of that. It's not going to happen now. So they don't have. America doesn't have the gold, most probably not, and therefore, if they try to revalue the gold to boost the balance sheet, that's just anyway the paper action and not with no fundamental change in the economy. But nevertheless, if they did that, China would say, or Russia would say,